Alright, so in this video, I'm going to talk about how I knew this specific execution was about to pan out before the week even started. I'm going to go in detail about the details and the specifics of the trade, how I thought throughout the trade. And for those of you who do not know me, my name is Stoyan Allen, and I've been predicting and documenting the Nasdaq since 23 onto 2024 and on to 2025, and I plan on doing it for as many years as possible until I cannot mention the years anymore. This is the exact thing that I was talking about, the 2023 market predictions. I have these playlists on my YouTube channel, the 2023 when I started this YouTube channel, 2024 market predictions, and I also have a section in which I have my documentation, the 2025 documenting, where I will post both my trades and this types of videos, and you can access them by going to my playlists and you can look at each of them if you want to do so. I also want to state that I have uploaded the first 11 mentorship lessons that I've had from my previous private mentorship. So I still have this ongoing mentorship. I still have ongoing students. But these are the core lessons that I used and that I use into my trading. And if you want to get even more specific, you can DM me on Telegram to join the private Stoyan Capital mentorship that continues with month 2, month 3, month 4, and the other things that I did not state in this private mentorship. But if you do not have the means to join the private mentorship, you can go and study in deeply these videos and use them as you please. And getting into the video, this is the specific execution that I'm talking about. You can go and see it. This is going to be in my description. Making money with ICT concepts, a trade that I took between 750 and 810. And let's go in depth about how I knew the fact that the market is going to deliver on Thursday and Friday, but more specifically on Wednesday, Thursday, and Friday. So I've stated this in my mentorship, and I've stated this in previous lectures and previous videos that I've posted upon this channel or into this channel. The first thing that I look at in terms of analyzing the next week of trading is the economic calendar. So before I even go into the details of what I want to see into the chart, I want to see when I will trade. And how do I determine that? I determine that based on the high impact news hour events. Because my trading is solely based on ICT concepts, I anticipate a specific bias, a specific direction for the week. Or if I don't have any bias, I'm going to stay out or I'm going to trade intraday volatility. But what I do is I go into the economic calendar and I have already pre-made rule sets which state the fact that, first of all, I'm not going to trade these specific days and I'm going to trade those specific days. So I already know which days I'm going in with, looking for that specific bias. So for this week, because we have the major high impact news hour CPI, what I did was I anticipated that Monday and Tuesday are going to be problematic in terms of seeing a biased or a one singular direction run. So what I did is I dismissed Monday and Tuesday for my trading, and what I did is I traded after the CPI event happened and the days after. So my trading began at 8:30 after CPI for the week, looking for a specific thing. And then on Thursday again, it was prior to 8:30 because of the things that I'm going to talk about in the chart. But basically, by just looking at this, I anticipated that I'm going to trade Wednesday, Thursday, and Friday. More specifically, Wednesday after 8:30, Thursday and Friday at 8:30, or you're going to see more specifically why I traded before 8:30. So, looking at this chart, anticipating the fact that I'm going to trade on Wednesday, Thursday, and Friday. This analysis was done before the market performed the Wednesday CPI. As I have an underlying bullish bias from this week, from week 3 of January 2025, related to the monthly chart, and because I saw the fact that the market did not close above, it closed above the -1 yearly measuring gap standard deviation, which is a deviation that I've had since 2024, and that was my 2024 target. But since I believe that the first part of the year, which is related to a 3-month chart, because I believe the fact that we have to go up first, that is going to be my underlying bias for January, February, and March. I will look for high prices upon targeting buy-side liquidity pools. So, knowing that and seeing the previous week close above the -1 yearly measuring gap standard deviation, and seeing the fact that the market opened, it went back into some form of a monthly PDRA and also weekly bullish order block, based on knowing the fact that I want to see the week go higher by extension by my monthly and 3-month narrative. I already anticipated the fact that Monday, which is after this day, at the time of the screenshot, I already anticipated the fact that the market has already created the low of the week, which means, by extension, that the market is not going to go below the current low that is laid inside of the chart. I anticipated the targets of the weekly BC low, weekly BC consequent encroachment, and the weekly BC high, and the quadrant levels. I was looking at this wick, targeting this 50% and the opening of this candlestick. What I want to see the market do with this BC, I want to see the market trade higher and then later on use it as a means of support. But when I do my weekly analysis, I do not try and predict the next 2 to 3 candlesticks. I try to predict only, or I try to anticipate and create scenarios upon the current or the next week of trading. These scenarios, as you can see inside of my POT lecture that I've put on YouTube, this scenario tells me, or this scenario for this specific week tells me that if the market closed below this, then I'm going to look forward for levels of sell side, and I'm going to have my bias switched and my narrative switched. Or what I will do is, if that is not going to happen, I'm going to have my underlying bias to the upside, targeting my normal targets, targeting this high, consequent encroachment, opening, and again these levels and something higher. So going into Wednesday and Thursday and Friday, I never wanted to see the market go back below the Monday's low or this low that we have in this underlying chart. So my bias was to the upside. My narrative was that the market has to close above this to use it as a lower time frame level of support into sending price higher. And because I wanted to see the market, and I still want to see the market above this level of buy side, I want this bearish order block to fail, and I want this to be used as a means of support. And how do we do that? We have to close above it. For a PDRA to fail, we have to close above it. Of course, this is a bullish PDRA. This is a reclaimed fair value gap, so I would want to see it used as the normal standard fair value gap. and I also have a lecture or 2 lectures for fair value gaps. Instead of the S&P chart, same thing. We saw the December sell-side liquidity pool being taken. My current dealing range in which I wanted to see the market retrace back into and then continue higher was from this low up to this high, because this was a balanced price range dealing range, which means that we do not want to see the market go back into it. Looking at the 50% of this order block, we never closed below it. So that is still a period in which I'm looking for the market to be sent higher, to see some type of sensitivity above. And my targets were the 50% of this, using it as a means of support. And the reason why is because I want to see this fail so we can get into this high and into this constant encouragement, and later on into this December buy side liquidity pool. So the relative S&P, I would want to see the absolute same thing. And this was my daily analysis after we had Monday, Tuesday, and Wednesday, because we're talking about Thursday. This was my analysis before the market had opened, not opened, but before 8:30. So you can see the time is at 7:39. So what I was anticipating was for the market to leave this intact because we closed above this Reaper, and a Reaper fair value gap is used when we're going to see the market continue. When I do not anticipate, or this is not a reversal run, right? Let me just follow my cursor. When we are not in a overall reversal model and I anticipate the market to go higher for some level of liquidity, and we are in a continuation run, not in a state of a reversal, this is when these Reaper inversion gap is going to be used. In what do I mean by this? I don't want to see, I favor this over a breaker on a high time frame perspective. So if this was a weekly chart, I would favor this to be a supportive PDA for my bias. I saw the market creating a swing low. The bodies that tell the story. The bodies closing above the yearly measuring gap standard deviation. We saw this open, go lower, failed to reach the constant encouragement of this tail. We closed above this, which means that the market is going to use it as a means of support. And we saw the market coming back into it. So once we came back into it, if I am correct within my narrative, then the market should perform the next signatures. The market should not go below this low. The reason being is because we have already done the work to reprice back into this Reaper lower quadrant. So therefore, when the next candlestick opens, I know that this should not be taken if I'm correct, and we should expand higher. This wick should not resist price going higher. It should fail, and this should become a bullish order block. How does a bullish order block become a bullish order block? You also have that within my free mentorship that I had on and that I have on my YouTube channel. So for this to become a bullish order block, we have to go above. We have to trade above its high. So if I wanted to see this daily candlestick going to the upside, then we should not take this low. And I want to see, therefore, the market expanding higher above the volume imbalance that I have annotated, the daily inversion constant encouragement of the wick, which is this one, and to close above this bearish order block because I want to see the market expand higher with speed. For my 4-hour chart, what I anticipated was the fact that, or what I saw was the fact that the market came back into the busy. And then I anticipate, this is not yet a balanced busy. I anticipate this to be created as a balanced busy, which means that the market comes back into it, makes it efficient, and then as we leave it, we have to take a form of a swing high that will tell us that this has been balanced until we reach a higher time frame target, which is another lesson that I have on my private mentorship free videos that I put inside of this YouTube channel. So this here is a sign of strength because the market failed to reach the 50% of this. We closed above this fair value gap high. So therefore, I would want to see the market expand higher and take on this high, which was my draw liquidity for the session. Market opened, came back into this and into this order block specifically. Then the market went higher with speed, or it's a 4-hour chart. This is going to be seen with speed on a 15-minute chart. And this was the candlestick in which we were trading at or before the execution that I did. The market opened. We can see that the open and the current price, quote unquote, current price is at the same. So therefore, for this candlestick here, I anticipated the market to never run the current low or the low that we were trading at that time, because I wanted to see this as an immediate rebalance. And an immediate rebalance tells us the fact that the market is going to see speed after the market creates this signature, because this is the strongest signature in price action. Also, again, you can see that the market left that inversion gap that we were talking about on this is a 4-hour inversion gap. So what I wanted to see from this is to never go back below this low and to go higher with speed, targeting a closure above the weekly BISI, above the daily volume balance low, inversion consequent encouragement of the week on a daily chart, and the volume balance high, and ultimately into this buy side liquidity pool, which is the same level as the weekly BISI high. This is what the market did on a 15-minute chart after my execution, and this is the representation of everything that I talked about in a 4-hour chart, which is the market going back below a level of sell side. And what does the market do here? If you're going to look at my private mentorship lecture on algorithmic phases, right here I anticipated the market to quote unquote reverse, which I'm going to correlate with the PD rate of a liquidity pool. So after the market went below the level of sell side, my eye jumped directly to this level of buy side, because after we take an opposing liquidity pool from my bias, because I was anticipating the market to go higher, correlating it with the fact that I did not want to see the market go back below this low, because this is the 4-hour immediate rebalance, which you can see right here. This is the same price action. As I saw the market coming back into it and then closing at the BISI high, then we opened up a new candlestick, went back, forming a swing low into this BISI. I was anticipating the market to take this high and the underlying higher time frame levels that I've had inside of this chart. So when the market closed above this BISI, once we opened higher, lower, once we went lower into it, I was anticipating the market to never take on this low, to go and rush above this level of buy side. So we can see a market that is going to have underlying speed. So this is the reason why I've traded before the 8:30 news and not after the 8:30 news, because of everything that I've said until this time frame, because I was never expecting this to be taken. And guess what? If this was taken and I would take a stop loss, this will tell me that my daily and 4-hour narrative was wrong, and I would be pleased to see that it was wrong and I decreased how much loss I would incur with my stop loss. And lastly, this is the execution. As you can see, everything is again based on a 15-minute chart. This is the long session sell side liquidity, which you can see here. We have the market taking on level of sell stops on a 1-minute chart, also coming back into a BISI. Market went higher, back into this order block, rejected, failed to go below this low. We've had a market structure shift here. Market came back again into this volume imbalance. We ran away from it, closed above the mean threshold of this. We formed this as an order block as we traded above it. Again, took another swing high, which tells me that this range now will become a balanced price range dealing range. So this means by extension that I'm not going to want to see big retracements back into this range. So therefore, because everything happened between 7:50 and 8:10 macro, and my trading only will occur inside of a macro, as you can see, every single trade on my YouTube channel is based on a macro. Market comes back into this busy, and I bought right here at 21,142.6, placing my stop loss below the mean threshold of this order block, because if the market would have came back into the mean threshold and if it would close below it, then it would mean that I was wrong and I would want to be out. So that's why my stop loss was here. Market came back into the mean threshold and then quickly repriced higher into this busy, which told me that my underlying narrative is currently stronger, or it is currently strong. Market opened higher, lower, failed to reach into the constant encroachment of the tail, and then we saw the market create a swing low. Market closed above the 50% of this order block, came back into it, and then opened 50% of the busy, and then we went higher above with speed above this liquidity pool and also above the constant encroachment of this higher time frame inversion gap. Market opened with a volume imbalance, which again, this is a signature of speed that I have studied on my own. So this is nothing from ICT. This is purely my own study when it comes to these types of signatures. That's why I don't want you to take these lessons as I tell you that, oh, this should happen or this should happen. I want you to go in and study them for yourself and understand the logic. Because if I only tell you this is going to happen and this is going to happen, and you take them as they are, you're not going to understand anything. You're just going to get lost. So the market opened, went higher above the upper quadrant of this higher time frame inversion gap, and therefore it meant that I would want to see the market go into the high, which exactly happened. I got out at this quote unquote retail resistance, which is an underlying level of buy side, and then ultimately we reached the breaker standard deviation that I wanted to see as my main target, and my weekly target was the weekly busy constant encroachment, and as you can see, we went a lot higher than that. But one lesson that I want you to understand from these trades that I put on my YouTube channel is I never needed the basic constant encroachment as my take profit in the first place. I never needed the breaker standard deviation as a means of my target for my take profit in the first place, because what I'm aiming for is not the monetary reward. What I want is constant growth upon how much I'm willing to let the trade go. So I'm going to slowly progress upon where I place my targets in terms of the take profit. I'm going to exit at the opposing level of buy side. Then when I feel comfortable with that, and I've done it for a lot of months in a row, I'm going to go and let the trade go into the breaker standard deviation. Once I got comfortable with that, I'm going to be comfortable with letting it go into the basic constant encroachment, and that is a slow and progressive approach. So that's the reason why I did not let the trade go into the breaker and I've exited early, because of that perspective and because I'm teaching discipline, and I don't really put the emphasis on the monetary reward, because that is just going to be a bonus. So the focus should never be on the money. The focus should be, in my opinion, on the correct risk management, on the correct money management, on the correct trade management. Where do I put my stop? When do I move it up based on rule sets? For instance, when the market reaches the 75% of the implied dealing range, which is a deep premium in this case, that's when I'm going to stop thinking about pyramiding or adding to my position. And that's when I'm going to put my stop loss at break even. And I'm just going to let the trade go if I have a big target that I'm going to aim for. I hope you guys enjoyed this video. I want you, if you did enjoy this video, to join the free Telegram where I document in real time everything that I talk in these videos. And until next time.